Singapore has upgraded its economic growth forecast for the year, boosted by growth in both the services and manufacturing sectors. The economy is now expected to grow between 3.5% and 4%, up from an earlier forecast of 2.5% to 3.5%. Singapore's economic growth picked up pace between July and September. Third quarter GDP rose 5.8% on year. That's compared to 4.4% in the previous quarter and higher than advanced estimates of 5.1%. The better-than-expected performance prompted an upgrade of Singapore's 2013 growth forecasts. And the economy is projected to grow by 2 to 4% in 2014.
Externally oriented sectors such as manufacturing and transportation and storage are likely to provide support to growth, in line with the gradual pickup in the global economy. Domestically oriented sectors such as business services are also expected to remain resilient. However, tightness in labour market conditions may weigh on growth.
And to help crunch the numbers, Song Seng Wun, regional economist at CIMB Research. Seng Wun, thanks for joining us.
Pleasure.
A good third quarter performance and now a revised upward growth of the whole year. Are you surprised?
Not entirely. If you remember 5 weeks ago when they released the advanced estimate, we already had growth of almost 3.2% for the 9 months of the year. So we knew that it's either being growth for the full year will be bumped up towards the higher end of that new range or old range, or tweak up slightly, so they decided to introduce a new range.
Now, manufacturing and wholesale contributed to the expansion. Let's talk about the subsectors that help boost this.
Well, manufacturing, obviously important segment of Singapore's economy, roughly around 28% itself. Within there, tech is very important, 1/3 contribution. I think what we are seeing within tech is that we are seeing the gradual global recovery in demand feeding through some component of tech. So that led to that small, modest recovery. And then elsewhere, the shipyards are very busy. If you look up to Tuas and Jurong Marine itself, very busy shipyard. At the Changi side, aircraft hangars are also very busy, maintaining planes, etc. as well. So these are the key contributions that led to the rebound in manufacturing.
Now let's talk about the drag. Construction, as expected, did not do well. What are some of the contributing
Plus or minus,
factors?
I mean, construction is one of those that have done really well over the last 7, 8 years with fairly steady growth itself. Month on month, quarter on quarter, it can be lumpy, and we had seen 2 quarters of very decent growth, especially in the second quarter itself. So this slight pullback isn't really a huge surprise itself. Going forward, I think we're still likely to see 5-6% growth for this year. Contracts are still coming through, 25-30 billion annually. So I think we still can look forward to modest single-digit growth for construction.
Oh, and that's expected and within range?
Yeah, within the range of modest infrastructure improvement that we're seeing. Building works on the private sector side, public sector expenditure, infrastructure is also taking place as well. So together, I think we should still continue to see growth on that side.
Okay, now another sector that had positive growth, services.
Yeah.
Now that is very labor intensive, but
Indeed.
given the tightening rules, what's it going forward?
Still tough. I think that's indeed one of the key drag perhaps on overall growth itself. Services is about 60+% of the GDP. But for some, like F&B, it can be very labor intensive indeed. And as the economy is being restructured, because we are going to rely less and less on foreign labor itself, it's all about raising productivity. So until we get that switch from a smaller pool or slower growth in the overall labor pool within services into translating into productivity, we might find that many of the labor intensive like F&B, restaurants, hospitality will have to struggle somewhat.
And what about restructuring? Do you think they're in the process of that?
Yeah, we are seeing that already. And the good news on that side is if you look at labor productivity, it looks like it's starting to come around. Last year, labor productivity contracted by about 3%. This year, I think in the third quarter, it's almost 2% growth versus hardly any in the second quarter and modest contraction in the first quarter. So the trend appears to be improving. Fingers crossed, I think that will help towards the underlying restructuring.
Okay, speaking of an improving trend, then what do you expect for fourth quarter?
Well, fingers crossed. We're already almost the year end already, and looking around at people on the street, and given civil servants are going to get bigger bonuses, hopefully to go out and spend as well. It looks like the underlying growth momentum for the fourth quarter can be maintained. If so, we should be able to meet at that the higher end of the new range forecast itself. We ourselves are probably looking at around 4.5% itself, depending on whether those civil servants spent and whether the manufacturing sector get that lift from improving orders.
Okay, now a quick look ahead for 2014, given the externalities of U.S. Stimulus and China probably calibrating their growth. What does that mean for Singapore?
Well, existing risks remain. We're still not quite sure whether how the financial markets as a whole around the world will react to the likelihood of the U.S. Federal Reserve saying that we need to inject less money into the U.S. economy because the private sector are starting to hire more. If that broad-based recovery in labor continues, then it basically means that our growth prospect will improve. But that's just one side of the coin. The European side is still trying to get out of a recession. Even if they do, the labor market remains very, very soft as well. So the improvement in the overall demand, export market is very important for Singapore. Trade is 2 times the size of the economy itself. If that continues through, we should get the lift itself. But here in Asia, obviously, we have to worry about what's happening in India, what's happening in China as well. These are the externality which we worry about. Domestically, obviously, some businesses may fail because rising costs will have some impact in terms of the restructuring itself. But hopefully, whoever stays behind becomes more lean and efficient and adds to growth, not so much from 2014, but 2015 and beyond.
Okay, let's look towards that and the end results.
Hope so.
Thanks, Seng Wun. Thanks for joining us. And that was Song Seng Wun from CIMB Research with a look ahead on the economic outlook.